Hi everyone, my name is Johnny Buschardt. I'm the Senior Manager of Training and Consulting here with the Oklahoma Center for Nonprofits. I'm in the Tulsa office. Today we're going to be talking about the PPP program, which is the Paycheck Protection Program offered by the SBA. The PPP program was rolled out in the midst of the COVID-19 crisis and is designed to help for-profit and not-for-profit organizations with 500 employees or less supplement their payroll throughout this crisis so they can keep their folks on payroll, keep their employees with a paycheck, and hopefully resume operations as quickly as possible when COVID-19 passes. The process is a new one. They have never allowed nonprofit organizations to apply for loans with the SBA before, so there's a bit of a learning curve for everyone involved, from the SBA to the financial institutions to organizations like ours, to your own organization that may be applying. So we ask that you keep that in mind as we go through today's information. The information I'm going to offer you is current as of April 14th at 8:30 in the morning. However, things are changing rapidly in some cases, so feel free to check back with us to see if there might be any updates to the information that you're sharing. With that said, we're going to dive into the program. Again, this is the Paycheck Protection Program offered by the SBA and how to apply for those funding dollars. Rule number one that we need to know, as I mentioned earlier, everything is likely to change. Over the last 2 weeks, guidelines have changed, guidelines have been created, some guidelines have been omitted. Again, the information is current as of April 14th, but realize things may change, clarification may be issued, sometimes on an hourly basis, sometimes on a daily basis. If you do have any questions, don't hesitate to contact the Oklahoma Center for Nonprofits or your local financial institution, as either of us should be able to answer those in full. As I said earlier, the Paycheck Protection Program was implemented by the SBA. The information is on the page in front of you. We are acting based on the interim final rule. Final rule has not yet been issued. This is actually interim final rule 2.0, but all of the information is current as of today. And hopefully, if there are any changes or modifications, we'll be able to get those to you as quickly as possible. So the Paycheck Protection Program is first come, first served program. There is a spending cap. The cap is currently $360 billion, although Congress is trying to allocate an additional $250 billion for this program. To be eligible, you must be an organization with 500 and fewer employees, a for-profit organization, a tax-exempt organization that is classified as a 501c3, a 501c19, or a tribal business concern. If you are a 501c6 or a 501c4, for example, you unfortunately are not eligible for this program. You had to have been open and in operation on February 15th of 2020, had the employees for whom you paid salaries and payroll taxes, or could have paid independent contractors. That can be a bit misleading because independent contractors cannot be calculated on the payroll calculations that we're going to be going through later, but you could have been paying them as one of your qualifying eligibility requirements. And then you're going to be asked to submit the documentation that is necessary to establish your eligibility. It may be your IRS recognition letter, it may be your payroll processor records or tax filings, but please gather all your payroll records prior to submitting your application to your local bank, as they will be requiring that information. The maximum amount of the loan is the lesser of $10 million, or an amount that you'll calculate using a payroll-based formula, which is specified in the Act. The formula essentially equates to 2.5 times your average monthly payroll for the preceding 12 months or the 2019 calendar year. So you can have either $10 million or 2.5 times your monthly payroll, whichever is less. How can you calculate the maximum amount you can borrow? The methodology, which is one of the methodologies that is actually contained in the Act, will be most useful. Step number one is to get your aggregate payroll cost for the last 12 months. For those employees whose principal place of residence is in the United States. Unfortunately for this Act, international employees who reside overseas or out of the country will not be eligible for this. And then you're going to subtract any compensation paid to an employee in excess of an annual salary of $100,000 a year. So as we move forward with these computations, any employee that makes over $100,000, for the purpose of this computation, their salary has to be reduced to $100,000 per year and can't be any more than that. So you're going to calculate your average monthly payroll costs that were for the previous 12 months, and then you're going to divide that by 12. So if your average monthly payroll costs were $60,000, $60,000 divided by 12 for 12 months in a year would equal an average monthly payroll cost of $5,000. Payroll costs, we're going to go through what those can include here shortly. It's not simply the amount that your employees take home. But then you're going to take that monthly payroll, which is $5,000 in the example we used, and you're going to multiply that by 2.5. If you have received an existing EIDL loan, you will add that amount in. Most folks have not, but if you do and you have any questions about that, feel free to reach out to us. So again, if your average yearly annual payroll total cost were $60,000, you divide that by 12 months for a cost of $5,000, then you're going to add in that 2.5 multiplier. So you're going to have 5 times 2.5, and your loan amount would be $12,500. Here's an example on the first page where you have no employees that make over $100,000. Your average annual payroll is $120,000. That means your average monthly payroll is going to be $10,000 because 120 divided by 12 is 10. Multiply that by 2.5 and you're going to have $25,000, which is your maximum loan amount for the PPP program. A second example, if you do have some employees who make more than $100,000, some organizations are very successful, have huge budgets, huge responsibilities, and they sometimes have larger payrolls. If you fall into this category, suppose your annual payroll is $1.5 million. You're going to subtract those compensation amounts that are in excess of $100,000. So you may have 3 or 4 employees who have $130,000 or $180,000 or $220,000 payrolls. All of those have to be reduced to $100,000. That is the payroll or the paycheck cap on this. So 1.5 million with those $100,000 payrolls reduced is going to be 1.2 million. You'll divide that by 12 for 12 months of the year, which is when you come up with 120,000. Figure in the 2.5 multiplier, and you'll have a $250,000 loan amount, which is the maximum amount you can qualify for the PPP program. So if you do have an outstanding EIDL loan, for example, example number 3 is for you. Here you have no employees who make more than $100,000, but you do have an outstanding EIDL loan of $10,000 already. So your average annual payroll is $12,000, or divide that by 12 months, you're going to get $10,000 for your average monthly payroll. You add in that multiplier of 2.5, we're going to have that $25,000 amount we came up with in example 1. These are the same figures for example 1. Then you're going to add in that EIDL loan amount of $10,000, so $25,000 for your loan amount plus the EIDL loan amount, and that's going to result in a maximum loan amount for you of $25,000. $25,000 for your payroll through the PPP, $10,000 added on through your EIDL loan that's already existing. And then the last example, you have some employees who do make more than $100,000 a year and you have an outstanding EIDL loan of $10,000. The annual payroll, 1.5 million. Again, as we did in example 2, we have to subtract any payroll or salaries in excess of $100,000 and bring those down to $100,000. That gives us an annual payroll of 1.2 million. So our annual monthly payroll would be $100,000. Multiply that by our 2.5 multiplier dictated in the Act, and you have $250,000. Then you have to add in your existing EIDL loan, which is $10,000, and that gives you a maximum loan amount of $260,000. So there's a few examples for organizations that are of all sizes with or without outstanding EIDL loans on how you might be able to calculate your PPP loan application. So we mentioned earlier, payroll costs are not simply what your payroll employees take home or whether what your employees take home is payroll. Payroll costs consist of compensation to employees as outlined there, payment for vacation, parental, family, medical, or sick leave, allowance for separation of dismissal, payment for provision of employee benefits consisting of group health care coverage, including insurance premiums and retirement, payment of state and local taxes assessed on compensation of employees, and if you are an independent contractor applying as an independent contractor, wages, commissions, income, or net earnings from self-employment. So most organizations will be able to include their employee payroll, the state and local employee taxes, the benefit costs, the retirement costs, the vacation costs. All of that is considered a payroll expense. However, you cannot include independent contractors or 1099 employees because, as is obvious in the example here, they are encouraged to apply for their own PPP loan. This is to eliminate the possibility of anyone double dipping, collecting from somebody claiming them as a 1099 employee and filing their own PPP application. So 1099 independent contractors, they cannot be included in your payroll calculations. All of the other items we listed can be, and they are encouraged to apply for their own PPP loan under their own 1099 banner. Is there anything that is expressly excluded from the definition of payroll cost? Yes, two things. Number one, those salaries in excess of $100,000 that we talked about earlier, salaries must be dropped down to a maximum of $100,000. And then federal employment taxes cannot be computed into your payroll computation. State and local taxes can be, but federal taxes cannot be computed into your payroll computation as dictated by the Act. Do independent contractors count as employees? We're repeating this because it's a question we've gotten several times. No, independent contractors can apply for their own PPP loan program and are encouraged to, but they cannot be counted as employees under your organization if they are paid as independent contractors or 1099 employees. The interest rate on a PPP loan is 1%. The maturity date is 2 years. You cannot apply for more than one PPP loan. You're only allowed to apply for one PPP loan. Can I use e-signatures? Yes, e-signatures and e-consents are going to be allowed for eligibility for the PPP program. When will I have to begin paying principal and interest on my PPP loan? That's another question a lot of folks have asked. Principal and interest is 100% deferred for 6 months, and you will begin payment 6 months after the last week of the PPP program payroll usage. Can my PPP loan program be forgiven in whole or in part? Yes. The amount of forgiveness of the loan can be up to the full principal amount of the loan and any accrued interest. We're going to talk about how that can be forgiven, but in a nutshell, there's a 75/25 threshold you have to be met. 75% of the PPP loan must be used on payroll and payroll-related costs as outlined earlier. So payroll, state and local taxes, health insurance premiums, retirement, vacation, etc. The other 25% can be used on non-payroll things that we'll outline here in just a second. As long as that threshold is met and well documented and verified by the lending institution, then your loan should be forgiven completely and you won't have to pay back any of it. The actual amount of loan forgiveness will depend in part on the total amount of payroll costs, the payment of interest on mortgage obligations incurred before February 15th, rent payments on leases, and utility payments on the dates that are given above. However, not more than 25% of loan forgiveness amount may be attributable to non-payroll costs. So 75%, as referenced earlier, must be payroll-related costs. The other 25% can be rent, utilities, and interest on mortgage payments, though it cannot pay the principal payments on that mortgage. It can only pay interest payments on the mortgage. So 25% can be rent, utilities, or mortgage interest payments. The other 75% must be payroll-related expenses, and if that threshold is met and those expenses are well documented, then the loan should be forgiven in whole or in part. Once the 8-week period provided by the PPP has been used, is completed, you will have to apply for forgiveness to your lending institution. They will then have 60 days to respond to you, either forgiving the loan or explaining why they wouldn't because of a lack of documentation, giving you the chance to provide that in order to get that forgiveness. Again, we repeated this question because it's been asked so many times. Do independent contractors count as employees? No, they do not. Independent contractors can and are encouraged to apply for their own PPP loan, but they're not allowed to be counted as employees for your payroll computation. What forms do I need to submit and how do I submit an application? The applicant must submit SBA form 2483. That's simply the PPP application form. That's available on our website. That's available on the SBA's website. It's available on a lot of websites now. But you must submit that, again, directly to your financial institution. You will not go through the SBA website for the PPP program. You will go directly to your financial institution. They will administer, approve, and fund the loan, and then they will be the ones forgiving the loan in the process. To review, because I know we touched on it very quickly, proceeds of a PPP loan can be used for payroll costs, costs related to the continuation of healthcare benefits, including periods of paid sick, medical, or family leave and insurance premiums. They can be used for mortgage interest payments, but not principal on the mortgage itself, rent payments, utility payments, other interest payments on existing debt obligations that were there prior to February 15th. So again, you can pay on the interest of that debt, but not on the principal itself. And then refinancing an SBA EIDL loan that had already been made between January 31st and April 3rd, 2020. If you did receive an SBA EIDL loan, you can still apply for a PPP loan. Organizations are encouraged to apply for both. And if you have questions as to how one might affect the other, feel free to reach out to us for further classifications. What happens if PPP loan funds are misused? If you misuse the PPP loan funds, the SBA will direct you to repay those amounts. If you knowingly misuse them, it's considered fraud, and you could be charged with that under the Act guidelines. Most of the time, if they are misused unintentionally, you'll simply be asked to repay them. They will be converted into the loan process. But if they are misused intentionally, that would be considered fraud. What certifications need to be made? When you're filling out the PPP application, you're going to have to certify several things. You're going to have to tell them that several things are factually accurate. Those include that you were in operation on February 15th, 2020, and prior to that, you had employees for whom it paid salaries and payroll taxes, or you paid independent contractors. Again, independent contractors cannot be used in the PPP calculations, but they can be used as a qualifying agent if you paid them prior to February 15, 2020. You're going to verify that certain economic conditions, the COVID-19 crisis, have had an adverse effect on your business, and this loan is necessary to maintain ongoing operations. You're going to confirm that they're going to be used for the express reasons that we outlined earlier: payroll and payroll-related expenses, lease payments, utility payments, and payments on mortgage interest. You're also going to have to document the number of FTE, which is full-time employees, or the FTE equivalent that you have. If you start the beginning of the 8-week period covered by PPP with, as an example, six FTE equivalent, which may be 6 full-time employees, 5 full-time employees, and 2 part-time employees, any equivalent at the start of the process must be the same at the end. So if you start with 6 full-time employees, you will have to end with 6 full-time employees. If not, your loan could be invalidated for forgiveness, and it would be considered a loan and retain its loan status that you would have to pay back. You're going to have to also certify that loan forgiveness will be provided, or the documentation for loan forgiveness will be provided, meaning the bank's going to ask you to verify that you use these for payroll-related expenses, rent, utilities, or mortgage interest. And you're going to have to verify that during the periods open in this loan, which is February 15th through December 31st, you have not received another PPP loan under another name or under your own name. So once you certify those things, then your PPP application has actually begun because you're considered eligible, and you'll be able to move forward. So we talked about the FTE, the full-time employee equivalent. This is how you calculate that. It's the page in front of you. So as an example, this says for the 2014 taxable year, we'll use 2019 because that was last year that most people are going off of. An employer has 5 employees that they pay wages for 2,080 hours, 52 weeks in a year, 48 work hours in a week. 40 times 52 is 2,080. That's where that number comes from. So 5 employees that are full-time at 2,080 hours a year, 3 employees that are part-time, 1,040, which is simply 2,080 divided by 2, or 52 weeks a year at 20 hours instead of 40. And 1 employee who they paid for 2,300 hours. That employee worked more than full-time. They worked a few hundred hours of overtime throughout the year, and this is how they'll calculate that. So 10,400 hours for the 5 employees that are full-time. That's 2,080 hours per year times 5 employees is 10,400 hours. You're going to be 3,120 hours for the 3 employees that are considered part-time. That's 3 times 1,040 hours in a part-time work year for 3,120 hours. Then the employee that worked 2,300 hours and had overtime, they must be reduced to full-time status of 40 hours a week only. So they're only going to count for 2,080 hours. And when you add those 3 together, that's 15,600 hours. So this employer has 7 FTEs because that 15,600 divided by 2,080, which is 1 full-time 40-hour work week year, equals 7.5, and you have to round down to the nearest number. So you'll add all your hours together, divide that by 2,080, that's going to give you your FTE number. And if it's not a whole number, you must round down to the whole number. So 7.5 would be rounded down to 7, 9.5 would be rounded down to 9, etc. Circling back around, the one thing to remember, again, these rules are likely to change. We used to say these rules may change, but now we have to say they're likely to change. So we recommend that you start the application process now. Reach out to your lending institution, your bank, your credit union, your farmer's co-op, whatever it may be. Reach out to them to begin the process. Ask them what documents they may want. Because it's processed by local banks, some local banks may have different documentation requirements than others, but do start the process now. This money, again, is on a first come, first served basis. There is a money cap on it, and you want to make sure that you're getting all of your bases covered. If you have any questions, myself and my colleagues, DJ Thompson and Jerry Wright, our contact information is on the page in front of you. Please don't hesitate to call us directly. Please don't hesitate to email us. Anything that we can do to help you, we're here for. We do have daily calls. You can get the information on the OKCNP website, which is okcnp.org. We hold those open Zoom meetings each day at noon. You can call in and ask questions about the PPP process specifically, or you can just reach out to one of us and we'll be able to help you out. Stay strong, keep your head high and your hand washed, and get that PPP process started. Thanks for tuning in.